Hi there, welcome to Kneppy Invest. On December 23rd, 2022, I released a video on a company called SKS Technologies, a fairly small company on the ASX. Some days, not many shares are trading in this company, so you could say it's illiquidly traded. However, this company does release Appendix 4Cs every single quarter, and this company has seen some pretty good cash receipts and revenue growth over the past few years. This company is profitable, and even though they were operating cash flow and free cash flow negative in financial year 22, on a quarterly basis, this company has become operating cash flow and free cash flow positive. And what the company has been doing with that cash flow into the company is paying down their debt. So this company is ticking a lot of boxes. Now, more than likely, not many people did watch that video I released on this company 1 year ago, but there was one very important person in regards to this company who actually did watch that video. And that person was the CEO of SKS Technologies, Matthew Jinks. And for the simple fact that he actually did reach out to me and he just wanted to know if I had any questions. He also told me about their AGM, have a good look at their AGM. So I did have a really good look at their AGM. And what I actually did read in their AGM, I can now understand why the market has become a little bit more interested in this company and why the share price has gone on a little bit of a run over the past few months. So I thought on the 1 year anniversary of me doing that initial video on SKS Technologies, why not do an update on the financial performance of this company? Now, SKS Technologies has had an interesting history, and I did go back through the history over the past 10 years or so because I actually do know this or did know this company as Stokes. And then in July 2018, they changed the name to Innovis. And to be honest with you, I wasn't really following the company that closely back in July 2018. And I had no idea they actually changed the name. And then they changed the name to SKS Technologies in January 2021. You notice the symbol or the logo hasn't changed all that much, went from a blue to more of a purple. So a lot of changes have been made in this business over the past, say, 5 or so years, including a strategic review. I went into a little bit more detail in my video last year, so have a look at that video. Might even leave a link to that. But let's have a talk about what this company actually does. So SKS Technologies delivers advanced technology through digital transformation via creative design and installation of converged AV, IT, electrical and communication networking solutions. So they're doing stuff in communications like voice and data structured cabling, optical fiber and copper, patch panel management, active equipment, audio visual display and projector systems, interactive whiteboards, specialist control lighting, public access systems, smart building solutions like converged networks, digital twins, active monitoring of essential services, energy management, maintenance and essential services, and also electrical. So this company has a lot going on. And when you do actually have a look at the management, not only the management, but also some of the directors, there's a lot of experience within these areas. Now, before I talk about the CEO of this company, Matthew Jinks, I just want to go back to 2012. So why am I going back to 2012 when this company was stoked? Because I do find the history of this company pretty unique because even though Matthew Jinks is now the CEO of this company, there is a Jinks or definite Jinks family flavor to SKS Technologies. So why is this announcement important, in my opinion? So the board of Stokes, and at this point in time, Stokes was run by a guy called Stokes. So more than likely, that guy called Stokes was the founder of the company called Stokes. So the board of Stokes is pleased to announce the appointment of Mr. Greg Jinks and Mr. Peter Jinks as directors of the company. Now, Greg and Peter Jinks were the co-founders and joint managing directors of an electrical contractor company called KLM. That was established in 1981, and by 2003, KLM had revenues of $36 million and was listed on the ASX. And then KLM was bought out or acquired by ASX listed company called Programmed Maintenance Services, which I don't think is on the ASX anymore. If it is, I've never heard of that company. And so then for a few years, after Program Maintenance bought out KML, I'm not sure what happened with Greg and Peter Jinks. Maybe they went on holidays, something like that. But then in 2012, The Stokes company, more than likely because of Mr. Stokes, decided because of Greg and Peter Jeek's experience in this space, they would be good candidates to become directors of this company. And then eventually, Peter Jinks became the managing director of Stokes, or had they changed the name to Universe? No, they're still Stokes. He became the managing director of Stokes in 2016 and remained in that role for about 5 or 6 years. Now we get to Matthew Jinks, who is now the CEO of this company. I'm not sure if Matthew Jinks is the son of Peter or Greg Jinks, or maybe he's just the nephew, or maybe the son-in-law of one of these two gentlemen, or maybe by some weird coincidence, they just all have the last name, which I think is probably unlikely. But Matthew Jinks did start as an apprentice electrician in KML Group quite a few years ago, we'll say 20 years ago or so, and then he moved up the ladder, the KML Group ladder. He became a director, and then when KML Group was purchased by Program Maintenance, he stayed with the company for a few years, and then he transitioned from Program Maintenance through to SKS Technologies in April of 2013 as a Chief Operating Officer, and now he's a CEO of this company. Now, he's been in SKS Technologies for over 10 years, almost 11 years now, we'll say 10 and a half years. So definitely he knows this company fairly well. And because he's moved up the ladder over his life, he knows this industry fairly well, this electrical communications and audiovisual industry. He knows this area fairly well, and that's what you want in a CEO. The other thing I should mention is, even though Peter and Greg Jinks are not the founders of SKS Technologies, there's definitely skin in the game, because combined, Peter and Greg Jinks own about 32% of SKS Technologies. They are still on the board, if I remember correctly, as directors or maybe executive chairman. So definitely a Jinks flavor to SKS Technologies, definitely skin the game. So when there is skin in the game, these gentlemen, Peter and Greg Jinks and the CEO, Matthew Jinks, want this company to thrive because they have money invested, their own money invested in this company. So that is one thing to like, not only a thing to like, but that is definitely one thing to like about SKS Technologies, that even though there's not founders in this company, there's definite skin in the game when it comes to the CEO and Peter and Greg Jinks. Now onto the financial year 23 results for SKS Technologies. Last time I looked, and this was at the end of trading, I believe, on December the 22nd, share price 27.5 cents. So share price has gone on a beautiful run over the past few months. We'll have a look at the chart later in the video. So at 27.5 cents, the market cap of this company is 30 million. Now, that has nothing to do with financial year 23 results, I just realized. Now onto the financial year 23 results. So even though the market cap is only $30 million, and that's not expensive, in my opinion, for a company that has revenue of 84.2 million, not only revenue of 84.2 million, but growing revenue at that. Now, probably the only slight issue you might have is they were aiming for $90 million of revenue. And this was a goal the company put out there maybe either a year ago or maybe 2 years ago. And I don't mind companies not hitting their goals, because at least the company had a goal. They also have a goal for financial year 24, and that goal I'll get to later in the video. But $84.2 million of revenue and nice growth in revenue over the past few years. Now, probably the only slight red flag I have in regards to financial year 23 results is a profit. Only $632,000 of profit, which was down from last year. And even though they only had $632,000 of profit, they were operating cash flow positive by $2.9 million and free cash flow positive by $2.3 million. That is the main thing I'm looking for in terms of these type of companies. I want to see cash flow. I don't really care about the profit all so much, but I want to see cash flow. And that cash flow was a pretty big improvement from the previous year, where they were operating cash flow and free cash flow negative. Now, the reason why there is a difference between the profit in operating cash flow and free cash flow is because of depreciation and amortization. Now to the September quarter for financial year 24, the first quarter of the year. Receipts, 26.8 million. So they're well on their way to achieving their revenue of $100 million. Now, there is a difference between receipts and revenue, but if you do just the rough calculations, times or analyze this quarter's receipts by 4, you get over $100 million. Now, even though they had receipts and growing receipts at that, at $26.8 million, the company was only operating cash flow positive by $405 million. The other thing you'll notice here is interest and other costs of finance paid $175,000. And what the company is doing and has been doing over the past few years is paying down their debt. And I believe that is the right course of action. That is really good capital allocation, in my opinion, paying down their debt. Now, one slight red flag, maybe another slight red flag, is a cash on hand. Only $11,000 on cash on hand, but the company is operating cash flow positive, free cash flow positive, and if they remain operating cash flow and free cash flow positive, having that amount of cash on hand, that's such a low amount of cash on hand, may not be a bad thing. They also paid $313,000 of their debt. So you just have a look at that operating cash flow, $405,000, and management have decided the main thing they want to do with that increase in cash is to pay down their debt. And to be honest with you, I can't fault management for doing exactly that. One thing I look for in all companies is growing revenues. In fact, it's the first thing I look at when I'm researching a company for the first time. I look at revenue growth and then I look at revenue per share growth, because some companies can increase their revenue, but then you look at revenue per share growth, it's actually going down because they have done massive capital raisings, because typically for acquisitions. Now, SKS Technologies have grown their revenue quite impressively over the past few years after a bit of a stagnation period between 2017 and 2020. But between 2020 and 2023, revenue has grown from 26.55 million up to 83.27 million. The other important thing here is I've included gross margins, and gross margins have been increasing through the last 7 or 8 years and have got to about 43.7%. And if this company continues to increase their gross margins, that would be a good sign, particularly if they can continue to increase their revenues moving forward. So that's one thing I'd be keeping a close eye on SKS Technologies, is their gross margins. Keeping a close eye on their revenue growth, close eye on the gross margins. And if I think those two things are moving in the right direction, I think this company is looking awfully cheap at $30 million. Now to some nuggets from their AGM. And I think this is one of the reasons why the market has become a little bit more excited about this company. Why the share price has gone on a run, not only share price going on a run, we have seen a little bit of an increase in volume. So the market is becoming a little bit more aware of this company. So year-to-date performance. So this is the first 4 months, 4 months, July, August, September, October. First 4 months of the year, revenue up to 34.5 million. So they are on their way to achieving their goal for financial year 24 in terms of revenue, and the goal is $100+ million. Maybe they should update their revenue targets to 110 million or something like that. So $34.5 million of revenue, but more importantly, EBITDA 1.8 million. Now, I don't typically focus on EBITDA all that much because for this company, it doesn't include depreciation and amortization. The whole reason why there was a difference between profit and operating cash flow and free cash flow was because of depreciation and amortization. But most companies, when they do give outlooks, it's typically EBITDA. So EBITDA 1.8 million for the first 4 months of the year. So if they can keep this momentum going, that's EBITDA of over $5 million for the full financial year, and profit before tax of about $1 million. So again, if they can keep this momentum going, that's profit before tax of over $3 million. Now, they also announced this pretty big project, a data center project in excess of $30 million, which boosts their work on hand to $80.6 million. So this company is hitting goals in terms of new contracts, hitting goals in terms of revenue increase, hitting goals in terms of being profitable and increasing their profits. So let's have a look at the chart and the market reaction of all this positive news flow coming through from SKS Technologies over the past few months. Now, I'm just going to show you a couple of charts. The first one here is the daily chart over the past 3 years, and then we'll have a closer look at the weekly chart. Some really interesting things to see or notice when we look at both charts. Now, when we look at the daily chart over the past 3 years, it's quite obvious that this company share price has been trading in a range, and the top of the range is around about 27 cents or so. Say between about 26 and 28 cents. And the bottom range is between about 13 and 15 cents. And to be honest with you, I have actually traded this company in the past. When I saw the share price get towards the bottom of the range, around 15 cents, I bought some shares in this company. And when the share price popped up above 20 cents, I just took profits. This was about a year ago, or just over 1 year ago, in the second half of 2022. Now, right now, the share price of this company is at the top of the range at 27.5 cents. And you can see last time the share price was at the top of the range, the share price actually more than halved. And that was between about November of 2022 through to about July of 2023. And now the share price has more than doubled from the bottom of the range to the top of the range. Now, the big difference between the share price falling this first half of this year and the share price rising over the past few months is the volume. When the share price was in the downtrend in the first half of 2023, there was not much accompanying volume. So there was no interest in the market. And when there's no interest in the market in regards to a company, more than likely the share price is going to drift lower. But over the past few months, we have seen a little bit of a pickup in volume. And that's why the share price of this company has gone on a run. Some really nice volume coming in, consistent volume coming in on a day-to-day basis. So the market right now is more interested in this company. And I think that interest has been driven by the AGM. The market likes the update the company gave. And that's why the share price has increased from, let's say, about 17 cents or so when the company did their AGM or released their AGM or had their AGM, all the way up to 27.5 cents as I speak. Now to the weekly chart, going back 10 years or so. Now, the first 5 years of this particular chart, in fact, about first 6 years, not a pretty picture. In fact, the share price high for this company, when they were known as Stokes, was back in 2014, 2015. The share price did reach a high of 50 cents. And then the share price went from 50 cents all the way down to a low of about 4 cents, or just under 4 cents, in the middle of 2020, just after the COVID-19 financial panic. And if you do look at the panic period, say around March, April, share price did reach a low at that point in time, but there was accompanying really high volume. And there is some suggestions, some research that shows that volume leads price action. And I've seen a few examples of that when you see large volume coming in and then you see the share price starting to move higher after the large volume has already come in. And we have seen that, or we do see that with SKS Technologies in 2020. The really large volume in the mid part of the year, and the share price started to increase in the second half of that year. And over the past 3 years, the share price of SKS Technologies has been going sideways, trading in that range, fairly large range, between, say, about 12 to 14 cents at the bottom of the range, and the top of the range is around about 28 cents. We'll say between 26 and 28 cents. And the share price high the other day was actually 28 cents. And if you go back through time, the last time the share price of this company reached 28 cents was actually way back in 2018. So this company recently did achieve a 5-year high in the share price. Now, if the share price remains above 28 cents, if the share price can get to 30 cents, that would be good sign moving forward that possibly this trading range the company has been in for the last 3 years has been broken. So let's wait out for that. And I think there is signs possibly that could happen just because of some really good volume coming in the last few months. There is interest in the market when it comes to SKS Technologies. And that's the way a company share price can break out, when there's increased interest from the market. That's all I have for December 2023 update for SKS Technologies. It's been a good few months for this company and the shareholders. Some shareholders might be thinking about taking profits, particularly those who are focused on technical analysis. Share price now at the top of the trading range. But if the share price can break out above 28 cents, say to get to 30 cents, that will be a really good signal, a bullish signal, particularly because the reason why the share price might be breaking out is because of financial positive news from the company, particularly when you look at the AGM and the trading update. So if you have any questions in regards to this company, leave those questions in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.